As a reminder, none of what I say is financial advice. Strictly for entertainment purposes only. What's up, guys? Thank you for tuning in. It's good to catch up. We'll go over BTC. We'll go over, obviously, my opinions on, the broader market. We'll touch on some current events. Just cover this real quick. I put up a new link. It's the Linktree link right at the top of my page. I'm sure you're subscribed to my Twitter. Hopefully you're subscribed to the YouTube. But this link is, honestly, it's a lot easier to just compile any kind of deals I could get for you guys, whether that is sign-up bonuses, whether that is current products that I'm using. I'm going to populate this as much as possible. I put the trading book list up here. So right now it says Henry and Clark. It's because someone actually stole my handle and I had to work with Linktree to get them booted. And I'll be switching to the Flow Horse pretty shortly. But either way, there's the trading book list here. So I want to say it's as close to an exhaustive trading book list as you'll find. It's an archive of all the books that I've read, all the books that I think are really useful. There's a ton of them. Don't get overwhelmed if you're like, hey, Ryan, what can I read to help my trading? I honestly would take this list and I would start at the top. So, you see Martin Over Markets, that's Dalton, right? So it's market profile, TPO charts, technical analysis, financial markets. That's John Murphy. So that's an old TA book. I'm not a fan of like TA once you get outside of support and resistance. It's some very basic stuff. But needless to say, this is a really good book for some kind of fundamental base. You have some tape reading and market tactics. It's a really old book on just volume, options, futures, and other derivatives. It's a very technical book. If you're going to trade options and futures, it's a good book to obviously read, but it's not really a requirement. The number one trading book I would say that I would start with, and I've said this numerous times, sort of ad nauseum at this point, is Alpha Trader by Brent Donnelly. I would read Reminiscence of a Stockbroker, a Stock Trader, and then I would probably read some kind of price action book just to, again, stay kind of grounded in technicals as well. The point is, after all that, just like throw a dart at this page. You're going to learn most from the market in the market, actually practicing, sitting at the desk, observing. However, whatever view you take on the market, whether you're a high time frame trader or you're a low time frame trader, I will always say that low time frame traders, they have the benefit of getting a lot of feedback in a short amount of time versus a high time frame trader. A low time frame trader, they have the benefit of getting a lot more feedback from the market. Whereas if you're like, hey, I just want to trade the daily and be a position trader, the daily, weekly, monthly, and up, for the signals that you get, they're going to be few and far between, and you're not going to have as many swings at the bat to really get an idea of how you're doing. So that is the book list. A couple other things here. Again, the YouTube is there. The course is on the YouTube. So that should be helpful. Like I said, I'm going to populate that more moving forward. I just want to touch on real quick after that, I mentioned I kind of pivoted. I went from saying, I do think meme coins are a joke, right? Meme coins are memes. It's pretty tautological, right? I don't think they're serious. I think that they serve as sort of a signal to get the market interested. I think that they are great trades. They're attention grabbers, but I think most meme coins, the faster something is able to be brought to market, the more likely it is that it's going to round trip all the way back down to its starting point. Generally speaking, there's a pretty direct relationship between how tough a project is to bring to market and how well it does, at least in the short term. Meme coins are flashes in the pan. The only thing that really got my attention was this really attention-grabbing picture it's actually legitimate. It is the WIF hat from DOGWIFHAT. It was knitted. I would love a smaller version of this, and it was placed on the bull that is down in the financial district. This is a pretty iconic picture in my opinion already. I could be pretty slanted because maybe I might have been looking for a reason to get long WIF or to pick some WIF up, which I have, but nothing substantial. I just look at it and I say, what if this $250 million market cap coin currently, which is the number one meme coin on Solana, which Solana is like a cycle behind Ethereum. What if this becomes the next multi-billion-dollar market cap, peak excess, hyper euphoria beneficiary, further out in the cycle? So I have to own some of this. Yeah, I do think that for the 99% of other meme coins that exist, they're not worth more than a couple week hold, during a really hot period. There's a decent historical sample of price action flow, market maker behavior to study already. So first and foremost, my opinion is obviously there's going to be a lot of airdrops. I personally don't see it as being something that's great, other than there are some times when it's really fair, but it seems like a lot of the times after an airdrop, the market always, depending on the mood, focuses on who benefited the most, what was known beforehand, the few people that managed to make away with most of the pie. And then a lot of people get caught buying the top and they're burned for months because usually there's a pump and then there's a dump. Then there's another pump, and then there's a longer reaccumulation phase. So almost never you will see a airdrop just go up only from that point. I don't think TIA was an airdrop, but really TIA is the only coin that I've seen listed recently that just went up only. Celestia, right? Celestia is something that I need a bigger bag of at this point. because I don't have a lot of exposure to Celestia. I was the person who was trading it lower, and unfortunately, like that goes, you understand. But what happens is with airdrops, there's obviously a ton of hype around airdrops. People want free money. I think there's an opportunity at each listing. So if we just look at Jupiter, right? This is on everything at this point. It's on Binance, it's on Bybit, it's on almost all of the major exchanges. It's not on all of them, but it's on Binance and it's on Bybit, which are going to be, in terms of just derivative activity, that's where the bulk of the activity occurs. For airdrops, with each listing, you essentially have a really great day to focus on from an intraday standpoint. So you want to have the dates, you do a little digging. Honestly, this is going to be just a shill of bread and butter daily. So bread and butter daily this is ArtXBT and can't remember who else, some friends from another small chat and some friends from Rebirth. This basically compiles all the things that are coming up, airdrops, emissions, any kind of event for a fundamental event, whether it's, stake, anything, basically anything you could think of with regard to altcoins. If there's an unlock, you name it. Okay, pretty simple. So bread and butter daily, this is a free access. But the point is with airdrops, something is, maybe it's on one major exchange, all right? There's going to be a bunch of activity because the market is really focused on these. These are catalyst driven trades and it offers really good price action. At least if anything, it offers one, free money if you get the airdrop, and then two, just a period of volatility when it's listed on the exchange. I think what you can do is you can study prior airdrops, identify there are some sort of patterns, and there's some phenomena that repeats for airdrops in that first 24-hour period. You might want to compile, let's say, how high it goes off of Binance listings, how high it goes off of Bybit listings from prior price, what the average 1 hour range is, 24-hour range. The point is you have an area to focus on. And then for the next 2 weeks, I think you have an opportunity for a larger trade setup. So what tends to happen with airdrops is you have a really volatile period, and just to give everyone an idea, rather, what we're looking at. This is Jupiter Exchange. This is the airdrop Jupe. All right. This is on Binance. It's on, like I said, Bybit. You're really only looking at 2 days, 3 days of price action. So 1 session, 2 session, 3 sessions. All right. You could see that it goes from high volatility to where the last session, this is a weekend. Okay. And it looks like weekends might be a little bit drier, which is cool, right? Monday through Friday, traditional hours. That'd be great. It might be thinner on the weekends though. You might see some kind of predatory behavior on the weekends, but right now the market's just kind of meh. But you're looking at Jupe. The good thing about an airdrop is right after you have a really good anchored VWAP. So you have an actionable anchored VWAP, I'll say. VWAPs are really very useful, right? A VWAP, before it was an indicator that CT became familiar with, it was basically a trade benchmark. If you're looking to buy, you want to get filled at or below VWAP. Again, that average price where most of the volume took place for that day, it's saying that you got in at a better price and you want to sell at or above. VWAP tends to be an area that's ripe with liquidity. Again, it's an average, right? It's an area where most of the risk, you could say, is concentrated over that period of time. It becomes a little less actionable over high time frames, but low time frames, just in terms of when market is ripe with positioning, is a really useful tool. And it's most useful when it's anchored from a catalyst. It doesn't have to be a catalyst. It can be anchored from a swing point, a session. It could be anchored from a news event, right? So some kind of news event, Elon Musk is buying more Dogecoin. You hook up an anchored VWAP to when that news hit and when price responded. And what you do is you get an idea of where that risk is averaged out, and you get an idea of where price is sitting in relation to that, whether it's 1 standard deviation, 2, blah, 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 blah. With airdrops, you have an anchored VWAP right from the listing. So you immediately get an idea of, okay, right now, post airdrop, obviously bears are in control because you have a bunch of free supply essentially hitting the market. So what you would ultimately want to see is, and this is something right now that Jupe is an example of, if we look at Jupe just intraday over the last few days, if you look at Jupe compared to other pairs over the last few days, and I know it's only 3 days for Jupe, but this is a 5-day look back on Solana, BTC, ETH, SU. Those relatively flat. So majors, it turns out if you were in other things besides majors for this pullback, you're really getting hammered. Whereas BTC and ETH are they're just chilling. But with Jupe, it looks like you do have a lot of people like myself who is picking some up and buying on the derivatives exchanges. There's really nothing that's happening. So they're buying, but there's a lot more supply hitting the market. There's a case, it's just more sellers than buyers, right? So for all that buying that's coming in, price isn't going anywhere. I'm thinking this is probably going to flush hard again before we see some kind of bounce. But what ultimately you would want to see is, for airdrops, honestly, when you have a very clean, some kind of clean structure taking place, obviously this is in a range overall, but you have periods where price is more clearly consolidating than others. Here's 2 expansionary periods, right? Expansion down, brief consolidation. When you have this with an airdrop, a lot of times you will get some really clean price action to base a longer position off of. So, if you're trading all this, let's say you're focusing on the next listing, listing. Okay, you're at the desk, listings occurring, you're trading intraday. Over the next few days, next week or so, you're seeing things really develop where, let's say you get something where prices, we do end up spiking, there's a major flush out, bunch of liquidations. You have these clean structures to go off of, right? Now price is back trading and rebid above prior levels within this consolidation, right? So it's brief, right? This is still just a few days old, let's say, maybe we're over a week at this point, but now you're beginning to retake ground. And honestly, with these, it's simple a lot of the times break of whatever diagonal trend line is governing this price action downward. So let's say you have this very clean diagonal, prices retrading above local levels, it's rebid at this point, buyers clearly able to overwhelm sellers at this point after trading much lower below VWAP for most of the time. So there's a clear shift to control. And now let's say you're above that diagonal and you're back above VWAP as well. You know, a lot of the times you could just take this and expect that this is going to overthrow much higher. And it gives you longer duration trades within something that gives you really good short-term trades. Point of all this is you could literally just spend the next couple of weeks identifying potential airdrop opportunities, right? There's a degree of obviously luck with this. But when you have something actually listed, you don't have to do much thinking, and then focus on where it's getting listed next and being at the desk for those listings. And then again, just spotting the easy brief momentum trade that occurs where you have substantial markup for a couple weeks before what this ultimately does is most of the time do something like this. Maybe it marks up trends for a couple weeks and then you get a longer reaccumulation phase because again, remember, all these people up here, happy to sell up here, already up 1000x, right? So you wonder, all right, this is 50, 60, 70% off of the highs. How is it possible there's still so much selling pressure? Well, guess what? There are people that are still up 500x all the way down there. So you just have to keep that in mind. So that's my opinion. A couple things high time frame wise. So just real quick, like my opinion is I still am of the opinion that we're going to move lower. Just to clarify, and I was very public with this, I for the first time sold some of my spot up here. So I sold some of my spot and I'm honestly looking to put that back. You know, that might be a mistake, right? Because we're able to hang out up here. So if we're looking at just a high time frame chart, like looking at the weekly, for example, big picture wise, right? It's very clear that this is really strong. So there's no real reason to get macro bearish or, you know, really doom and gloom as long as we're honestly all the way back above this prior range. Big picture wise, if we came down here, it wouldn't really change a lot. I mean, it would change it if you bought recently. But to be honest, like from a high time frame standpoint, this is a really good platform that we built, these highs, right? A potential platform. Not that I think that it has to come down there by any means. I personally am just of the opinion that we get something that maybe just retakes out these lows, trades back down under 40. Nothing crazy. The only crazy local levels that we have, when I say crazy local levels, if you look at the weekly chart right now, it's very clear we're stuck in a range. We could see how prior periods like this, how long they lasted. This is a really strong move. Price is going to move sideways for a while after you see a really strong move like this occur. Don't be surprised if you're starting to see alts that have done this, like Link ended up moving up. I don't know where Link is at right now, but if you look at prior cycles, like there were long periods where for a lot of the market, it was over. But it was just, you know, it was a period of vertical correction, right? There was a sideways correction. It's very clean right now. As far as like where the market would need to go to spell trouble, it's tough because if you look at this weekly chart, there's actually a lot of stuff that took place down in this structure, going back down to even sub 38. The thing is, you do have these ugly lows that are all kind of slightly higher than the next, which is the setup for a stop run because you have clusters of stops that weren't interrupted on this high time frame chart. You know, it's pretty easy to drag stops up for this entire move. But to be fair, like this is probably a pretty good level. This meaty area in the profile right here between 38 and 36. Only trouble area, like a gross area, would be this gap down here. But that's sub 34. Listen, can the market go there? Absolutely. Would it be shocking? No, because this market does things like that. But are there a ton of other levels, like these low volume areas, where the market could find support and logically we would be focused on that first before then, you know, talking about much lower prices? Yeah, absolutely. I'm just of the opinion that one, all right, we're back in this range. If we're trading cleanly back above 45, I think you could just put a bullseye right on these highs. It's very likely at that point that if we flip this level right here, you know, you can see how clean the structure is. There's your profile for that. That's bulk of the volume for this entire trend is now taking place up here, going all the way back to September. So the VWAP anchored going all the way back to this really strong quarter. So there's a lot of confluence around 36. If we were able to break below 38 as just being the next good area to get involved. This is not a thin area. It's not like you would expect price to move really rapidly through here, you know, then unless there's some kind of major move in legacy, 10% plus, 5% plus move in the S&P. We're going to become more correlated to the S&P now. I think it's inevitable, but it's always going to be the larger moves that are trouble, which is trouble for everybody either way, no matter what you're in for the most part, if you're in any kind of risk assets. So I think, you know, it's reasonable that we could just chop, honestly, between like 38 and 45. If we're taking out these highs, like you don't fade that, right? Because now we've put in this swing, taken out these lows for the range that we've been in going back to December. It's good, but it's in the middle and it's looking kind of farty at this point. If we're trading back above 45, you know, targeting these highs, targeting 50K makes sense. And then you're looking for this 46 to 48 region to act as support. At that point, like if you've moved sideways this long, you're probably targeting higher either way. I think that this is ultimately going back to all-time highs, going through all-time highs, but it's a matter of when, right? So high time frame wise, unless we start losing any kind of bid down at 38, like could we go down to 38? Yeah, I would assume that that's, you know, in the cards, but I wouldn't be mad if we didn't go down there. I would buy that portion back higher. Wouldn't have a problem doing that. Another thing to consider high time frame wise is that we are, you know, right in the cusp of the halving. The halving for me is not about the actual mechanics taking place in terms of supply and miners. For me, it's not about that at all. It's just that it is the most reliable narrative this market has ever had, and it's also the only narrative that really has any kind of traction outside of crypto natives. Like this is really insular. We have our own small narratives here, but this is one that other people outside of crypto that I know that aren't really that keen in this market are aware of. It's one that's going to be on CNBC. It is going to be in your face a lot more. It's worked in the past. It's a small sample size, but it's all we have. And again, the most reliable narrative that crypto has had that has lifted every single boat. So we're coming up on that like a month, 2 months away. If anything, what you want to do is just see that prices, you know, there's been sell-offs into prior halvings that were 30, 50% plus, obviously, right before. But if we're still just strong into halving, like drifting up higher, that's probably it, honestly. And if anything, if you are like on the sidelines, like I don't know when to buy, me personally, let's say nothing happens besides we go sideways with a slight positive drift. So positive drift for me into major events, pretty telling, right? Where you just have something that kind of slowly grinds up. And what this is someone just saying, I want to buy. I just want passively get filled over time, raising their bids up, chasing the market. And then you have sort of a chase that takes place as soon as you have a first markup candle. If we start grinding into April, May, and we're still drifting higher, maybe we have one more spike and lower, but it's telling the underlying strength is there. It's telling that it's already there to begin with, right? Like when I talk about a pullback because I think one's coming again, I tend to be that kind of person to begin with. And even I know that. And that's why I'm very quick to change my mind. But I just think we have a period of excess that we just came off of. One thing is that's positive is if you look at annualized basis, so the dated futures contracts, this actually came off a lot. Came off a lot probably because people wanted to grab this carry trade, but it came back down to November levels where price was at like 32, 33K. So this was a good amount of leverage in the system that came off, right? Post ETF announcement, a lot of leverage came out of the CME, a lot of open interest came off the CME as well. This is annualized basis, not open interest, but this is where a lot of positioning was. So a good amount came off there. Now this is more in line with your perpetual annualized, so your funding rates annualized. If we look at like BTC and Coinbase and Binance and Bybit, those are basically, if you're trading intraday, focus on just those. If you look at like Bitfinex, it's been buying a ton lately. But if we look at like BTC on Coinbase compared to Binance, over the last couple weeks, it's been trading at a pretty steep discount. So funding's still positive on exchanges. I'm still kind of weary, right? I think there's a little bit more leverage left in the system that we see get wiped out before we have sort of up only, right? I hate to say that because I never think it's up only, but you know, join the club. All right, guys, I think we're going to wrap it up. Remember, there is the link in my profile for any of the platforms, book list. You're already on the YouTube, but I think that link takes you right to the playlist. It's been enjoyable. Hope you guys enjoyed this, took something from it. I will probably hop on this week again. Can't say exactly when because you guys know if I do that I'll break that promise and reschedule it 4 times. All right, everyone have a good night. I don't know how to end streams, you could tell. Like, all right, see you later, alligator.